Back to the show. Well, that's some important information coming in on your screen. Sources tell CNBC TV 18 that the Reserve Bank has written to the Finance Ministry to seek more capital for the public sector banks. Our colleague Ritu is picking this up. Ritu Singh, she'll be with us in a bit. The RBI urges the Finance Ministry to more than double the capital infusion into the public sector banks. Remember, the government had announced close to 8,000 crores of infusion for FY16 in the month of February itself, and the government gave only about 7,000 crores in FY15 versus the promised capital. So we'll go to Ritu in a bit. But before that, just pull up some of the PSU banks on the screen.
Actually, you shouldn't be very surprised about this because this was repeatedly mentioned in the monetary policy statement as well. Well, actually, the author of the story is with us. Ritu Singh is joining us on the phone line. Ritu, what are you picking up about public sector banks and their capital?
Lata, so the Reserve Bank of India has written to the Finance Ministry urging them to more than double the capital that they have planned, announced that they will infuse into the public sector banks. You would know, to meet the Basel III requirements, $37 billion is only the amount in fresh capital that the public sector banks need. And so far this year, the government has announced about 7,000 odd crores infusion into the public sector banks. In fact, even last year when it was announced about 11,200 crore rupees, it only infused about 6,900 of the promised amount. So the public sector banks have been wanting capital, and the Finance Ministry has in fact called for the meeting with the heads of the public sector bank tomorrow. It will review their cases, it will take into account their annual performance, and we are also given to understand from sources that these public sector bank heads will start making presentations to the Finance Ministry starting next week to present their case and pitch for funds, and RBI is also doing its bit by writing to the Finance Ministry and urging them to raise this capital requirement. Of course, the meeting is scheduled tomorrow, so we'll find out more about what happens, what transpires in that meeting tomorrow, and we'll keep you updated.
All right. Thank you very much, Ritu, for that. Yes, the meetings start from Friday, and perhaps this very strong pitch will be made. I'm just trying to fish out the latest statement of the governor on June 2nd when the meeting happened, and I remember at least in 3 places the governor mentioning in the statement that more money should be provided to the public sector banks. I guess I can place my finger on it. He said the most important, the last sentence actually was that this will be, a monetary policy can at best create enabling conditions, and a fuller thrust to growth will come in only by stepping up public investment in several areas, and this will be important to relieve supply constraints. A targeted infusion of bank capital into scheduled public sector and commercial banks, especially those that implement concerted strategies to clean up their books, is warranted. And he said this in 3 places. This is the last sentence, the clinching sentence of the monetary policy statement, that we can create the enabling environment. Please put in more capital into the banks, and maybe you could grade them. Those who clean up their books faster should be given more capital. That's the idea. The government stance has been that if we gave them capital, they'll just take everything and provide for bad debts and, not go after the borrowers to recover assets or to, prim them up. But now that, they've got the weapons to find new promoters and they've shown some verve to recover, I guess the government may relent on its stand with the Reserve Bank writing and the bank chiefs maybe tomorrow making their pitch. Perhaps something will come. I would think this is positive for public sector banks, especially those who are showing the courage to clean up their books.
All right. Well.